Ladies and gentlemen, open banking pioneers, hello and a big warm welcome to our campfire. Now I'm going to jump straight in because this is a conversation I have been dying to have. VRPs, variable recurring payments, a game changer, question mark. This is the industry hot topic and it's what we will be talking about, debating today. And wow, you are in for a treat. If the speaker's briefing call is anything to go by, it was very lively and very passionate, and we love a provocative debate at OBIE. So let's start with a little scene setting and look at what VRPs are. They are the latest technology in open banking, said to rival direct debits, and they are just in their infancy stages. Now, on the 28th of July, the Competitions and Markets Authority, the CMA, ruled in favor of OBIE's OBIE's recommendation to mandate VRPs as a mechanism for implementing sweeping. Okay, now this injects further competition into the UK marketplace, and you'll hear from Alan from OBIE, and he'll talk more around the first steps that we're taking and the mandate being just for sweeping. All that said, again, the UK is leading the way. We created the blueprint for open banking, so we should all be immensely proud that we're taking yet another innovative step on this new journey. Now, this is a point we all need to hold very front of mind. It is a first step, and so we all know what VRPs are. Let's actually just quote from the OBIE's consultation document I mentioned before. Variable recurring payments, they say, are an emerging and novel way to securely instruct payments through APIs. VRPs enable innovation in payment experiences and the creation of new types of financial services for customers. Now, as you would imagine, at the beginning of any new journey, there are many questions, and as an industry, that we need to debate. From which accounts are the sweepings from? Are they from head office accounts? Wow, what would the impact of that be? Okay. Does VRP create a new acquiring opportunities? Is this the beginning of the four-party model starting to erode? Now, this is a model that I've dined out on for years, and one that's very, very close to my heart. It's a model full of consumer protection, as we have with the power and protection of the direct debit guarantees. So something that we will inevitably, at the right time, need to have an adult conversation around. That's the whole impact on consumer protection. Who pays for that consumer protection? Should it be the banks? Should we be asking the banks to invest more? Or do we need to create a different model? Now, these are topics that we may touch on today, but certainly need to be debated further down the line. And we are just beginning this game-changing conversation. So, of course, at this stage in the process, there will be tensions in the ecosystem. In the UK, we now have around 4 million open banking users. Now, that's 4 million users that are poised, ready to take advantage of the new opportunities that inevitably VRPs will bring around. Okay, so at OBIE, we pride ourselves on being the arbitrator for an independent industry competition. So I'm going to move right on. Okay, so I am delighted to give a shout out to our friends at Ozone API and their VRP Hackathon Challenge. And they are delivering that in partnership with UK Finance. I need to read these. Open Future World. So Marie, good luck there. It's been too long. We should have a catch up. Mastercard, WillPay, Accenture and Vault. The VRP Hackathon, they tell me, went live this week, and there's still loads of time to register and take part. It's a great opportunity to bring to life the potential that we've just been talking about, and we're going to hear more around VRPs. And they tell me the victors will win industry kudos alongside some other benefits. So nip over to Ozone's LinkedIn page, and you've still got time to register. Okay, so back to the here and now. As you have requested, I've asked the speakers to focus on the use cases. It's always about the use case. For those of you, as I have read the OBIE's consultation document, you'll remember that they actually quote 8 use cases. So I'm looking forward to us getting under the bonnet of some of those during our campfire now. Now, I promised you that you're in for a treat. So please do get involved. Down at the side of your screen, you can see Slido, and there's also a poll. So please do take some time out and have some fun answering that poll as well. Okay, I am delighted to introduce you to Oliver Smith, Managing Editor of AltFi, who will introduce our 2 panel sessions and then have a fireside chat with Jim Wadsworth from Mastercard, an ideal opportunity to wrap up our campfire and look at the impact VRPs will have on all our stakeholders. So Ollie, I think all you need to do is like the touch paper and let them go. Over to you.
Thanks very much, Helen. As Helen said, this is a really exciting area that we've been covering at AltFi for a couple of years now, but increasingly in the last few months as VRPs are really taking off. Now, the first panel discussion we're going to be tackling is why regulators are pushing for VRPs and sweeping. To help me answer that question, I've got 3 fantastic experts. I've got Alan Ainsworth, who's the head of policy at the OBIE. I've got Kat McLeod, UK policy lead at Plaid, and Stephen Wright, regulation and standards lead at NatWest. Now, to kick things off, Alan, I'm going to start with yourself. How did you at the OBIE arrive at this method, and what is the value proposition here?
Yeah, hi, and thank you for asking me to come on here, and thank you for the question. So the first thing we had to do, and the CMA asked us to do as part of our roadmap, was to develop something that would deliver sweeping. They didn't tell us what the answer was, they just told us that we had to solve for sweeping, because what they wanted to do was find a way to enable more competition in the current account market. And sweeping in particular is there to enable the development of innovative new propositions to help customers save, to make their money work harder, or to lower the cost of their borrowing. So sweeping is the automated movement of funds between money in accounts in the name of the same legal entity. So me-to-me payments, me-to-me movement of money. And they said, what's the best way to do that? So the first thing we did is we looked at existing ways to move money between a customer's own accounts. The 2 obvious examples that have been mentioned, direct debits and cards, do work, and there is sweeping in the market today, but they're not as good as we found as variable recurring payments would be. But we had to prove that for the CMA. And the second thing we had to prove to the CMA essentially is that we could implement and ask for sweeping, VRPs for sweeping to be implemented by the CMA9, and that would improve competition in those markets I talked about. And we did that to the CMA's satisfaction. And of course, they've made their decision for the CMA9 to implement VRPs, but just for sweeping.
Fantastic. And I guess that brings us on to the outcome of this decision, which is the benefits for consumers. And as Helen said, it's all about focusing on the use cases here. So I guess, Kat, I'll start with yourself, if that's okay. In your opinion, what are the potential benefits for consumers with this mandatory introduction that we're seeing around VRPs?
Yeah, of course. And thank you again for having me on here. Definitely a topic worth discussing and discussing in detail. So I think for us, there's so many potential benefits for consumers from both sweeping, but also kind of wider use cases around VRP. And it literally boils down to kind of just the generic principles of like PSD2 and open banking, that it's providing more security for consumers. It's also allowing it to be easier for consumers. And it's like, and especially VRP, the beauty of it is that it's not actually revolutionary. We're just making it better. So like, VRP is very similar. So like, as Alan already touched on, you have it direct debit. There's also other use cases where you compete with card on file. These are things that we as consumers never really think about. Like, when was the last time you actually thought about your direct debit payments? Maybe when you're looking on your mobile app and you see, okay, my mobile contract bill went out, great, but you never actually think about it. So the real benefit to a consumer is that we're actually now able to provide an open banking product where they don't have to actively sit there and think about every single payment that they actually need to make. So that is kind of, as we see it, one of the biggest benefits of VRP is that while yes, the consumer is still in control, they're being put back at the heart of the payment, they're not sitting there for every single transaction anymore, and they can kind of just let it happen in the background and go about their daily lives.
Fantastic. And Stephen, from your point of view, obviously bringing us, I guess, more of the incumbent sort of banking point of view, what's your take on the benefits to consumers? I think your mic might be muted.
Sorry, do not know what happened there.
No worries.
I must have inadvertently muted myself. Thank you for inviting me. I think VRP is really, really exciting. I think from the sweeping point of view, it does create better journeys for customers. I don't think it's going to revolutionize savings and investments and being able to avoid overdraft fees, etc. But it is going to make that far more accessible and make that far more of a consumer-friendly journey. But for me, the real excitement is what you can do in the payment space and how VRP starts to not just tackle direct debits and standing orders, e-commerce, but card on file payments, kind of new payment use cases. So kind of example I use is you take a car parking one. When you go and park your car as part of commuting on a daily basis, and you just set up a VRP just to go and take the money out of the account, reads your car number plate, and debits £3 a day up to a maximum limit you set, and it's all automated for you. And you have the control and knowing how much the final amount is, and you've controlled over what time period, etc. But if you start to think around how that kind of use case can be applied to all kinds of different payment scenarios, and the same as subscription payments, I think is really exciting as well. You can see how VRP can potentially replace a lot of subscriptions via card on file, direct debit, or standing order.
Yeah, it's amazing to think about that as a sort of a proposition. Kat, just coming back to you quickly, these kinds of, obviously Plaid's trying to enable this kind of payment revolution. How tangible, how close to reality are some of these use cases? Are you having clients asking you to help them enable them?
Yeah, so we're having open discussions with clients. We're having open conversations with banks. Like we're having actually very positive conversations with NatWest. So thank you, Stephen. But I think it's just, there's a lot of, everyone wanted this. Everyone in the industry has wanted this 5 years ago, but it's still building it out and actually making sure that through, and this was evidenced through all the consultation documents that the OBIE went through, that in order to actually make VRP work and to make sure that it's working best for the consumer, but also best for industry, it needs to actually be good. We need the groundwork, which the OBIE has established through the standard and through the mandate. We needed that groundwork in order to actually build a usable product. So now we're kind of in, as we call it, like the fun stage of actually building, the connecting, the having the discussions with banks, having the discussions with potential other fintechs, and trying to figure out exactly how we want this to work. Like, how do we want Plaid to provide VRP to our clients, to work with these banks, to potentially start thinking about a world beyond sweeping. So looking at things like VRP, how do we start those conversations? How do we want that to build out in the future? So it's definitely happening. I think the one thing that we have is that obviously banks have until January deadline to fully implement VRP. So we're still working with that deadline, but the pressure and the desire from industry is there, and it was there 5 years ago.
And Alan, just from your point of view, hearing these use cases being developed and coming forward, does this, I guess, tick, the aims that you guys had when you came up with the specification, enabling this kind of innovation that's going on?
Absolutely, but I would say very clearly that it's a byproduct, because we had to demonstrate to the CMA satisfaction that this was good for sweeping and that the requirement on the big banks to implement it would deliver benefits for sweeping. So just to remind people, the three core sweeping use cases, and I don't for any minute differ in my opinion from what Stephen and Kat have said about VRPs per se and all the different use cases enabled by VRPs. But for sweeping, there's three. Firstly, to help people start that savings habit. There is around 11 million people who don't save regularly or have very little savings. So if we can move that number up by making it easier, and VRPs definitely do make it easier, because if you think about the direct debit, there's a 3-day delay. That's not good if you're moving additional £10 a month across to a savings provider. So helping people start a savings habit. Secondly, to help people make their money work harder. And that's not just consumers, that's also SMEs. And thirdly, to lower the cost of debt, because if you can instantly sweep funds, you can pay debts off more quickly. So all those three, I think, are significant. I'm not undermining the other benefits of VRPs, but our question was, can we enable sweeping between accounts in the same right by VRPs, and will that benefit UK consumers and businesses? And I definitely think it will. The additional benefits of VRPs, I'll let others talk about, but they are clearly very significant.
It feels like the sort of definition of what we're talking about can be expanded beyond what it was intended for. Stephen, just on your side, do you think we have a common understanding or a definition of what sweeping is, and VRPs as well? Is there sort of like are we all on the same page with this?
I think at a high level, we're all on the same page. I think Alan's definition that's been published of what the scope of sweeping is really helpful. But I do think that every bank, every fintech will have a slightly different interpretation, and that I can assure you that probably each bank's implementation will be slightly different, because there are a number of clarification questions that as you start to build this and start to look into this, you start asking. And we've already been contacted by at least 8 TPPs asking questions about specific use cases and how we would handle it and what they need to do. So there's obviously a lot of questions out there still to be answered, I think, on the lower level detail.
The fintech industry loves to push the sort of boundaries of what is possible. So I'm sure many more challenging questions will come up. A quick reminder for our audience, we'd love to hear your questions. So if you have any questions, do post them in the Slido and I'll try and get to them before the end. Next up, Alan, for yourself, and I'll come to all the panelists on this, but I want to talk a little bit about the risks and I guess the consumer understanding point here. Helen touched on it at the very beginning. When you started to design the spec for VRPs around sweeping, what sort of risks did you identify? And do we need more, I guess, clarity on the consumer protection issues?
We spent a lot of time looking at this question. And as you can imagine, one of the reasons it's taken us some time between putting it in the roadmap and coming out with decisions is this question was on the CMA's mind as well. Now, we've only mandated this for sweeping, and the risks are lower, clearly, if you're moving money between a customer's own accounts. So we looked at that. We published some guidance material as well as part of what we call the standard version 3.1.9, which, by the way, is where we've had some of the feedback around the definition point that Stephen has just talked about. So we will be looking at that clearly and coming out with some help on that point as well. But we've taken consumer protection very seriously and had a lot of input from our consumer reps on our steering group and other consumer representatives too. And as I said, we've published that guidance around sweeping. When it comes to VRPs per se, our role kind of moves away. Our role has been to come up with a standard, to come up with customer experience guidelines, but not to go into the detail of what might happen in that conversation with the likes of Kat and Plaid and the likes of Stephen at RBS and NatWest. So how that all works through and who might be liable for what and what the consumer protection offer might be has to be determined by those organizations. But we've provided the guidance. What I would say around consumer protection, of course, is there's built-in consumer protections in the standard. There's built-in consent parameters, which enable the customer to say, for example, the frequency of payments. So within that, there's a double lock on that, because the PISP can show that to the customer and the ASPSP can show that to the customer too. And the customer has the ability to look at that and review those consents, and if necessary, and if they choose to revoke those consents. And that's significantly more control and transparency than you currently get with other forms of payment in this space. So we think it's a built-in level of protection, but we're not saying we've solved every single question. We think some of those things need to be solved by the market. That hasn't been for us to resolve.
Interesting. I was about to say, Kat, I'll throw this one over to yourself. It sounds like the ball is in your court to kind of help lead the way on this. What's your take on what Alan was saying around the risks, and does more need to be done to protect consumers around VRPs?
Yeah, and I think I agree with everything that Alan just said, that it's, and same with Stephen on the definition, that there are still some questions. And I think the liability and exactly how that's going to work is a very big question, that it's almost like the red herring, that we're not exactly sure how we want to tackle it, what we want to say, how the banks are going to react, but it's definitely a conversation that we need to have, because especially as we look into the world beyond sweeping into the premium APIs, that's completely outside the scope of the standard. It's completely outside the scope of PSD2. We can't rely on the things that are already baked into what we're operating today. So we really need to focus, and actually, in some cases, fintechs need to be able to stand up and say, yeah, we want to take on some liability. The VRP and like VRP beyond sweeping is such a good opportunity that it makes sense for us to take on liability in some cases. Like we have these discussions in the US already with banks where, okay, exactly where does the liability sit? In some cases, we do need to take on some of it. And in other cases, the bank holds all of it. It really just depends on the use cases, but also making sure that at the end of the day, the consumer is actually fully protected and that they understand exactly what protections they have, who they need to contact if something does go wrong, be it the bank, be it Plaid, whoever they need to reach out to, that it's not just, okay, yeah, in some terms and conditions that no one ever actually reads, it says that you need to do this, but that you actually know as a consumer, yeah, okay, something's gone wrong. I'm going to now contact Plaid and they're going to fix it for me.
Interesting. And Stephen, what's your take on that? Where do you think liability will end up sitting with VRPs?
I actually agree a lot with what Kat's just said, and I've had similar conversations in the last few weeks. So from a payment point of view, the liability is mandated by PSD2. So it's all around whether it's an authorized transaction or an unauthorized transaction. But really, that's only a very small part of the potential customer or poor customer scenarios. And it's really when you get into the kind of spaces, does the sweeping executed by the fintech create a detriment? Well, the fintech's authorized by the FCA. So there's already kind of protection built in there because they've already got to be operating to a certain standard. If you look at the payment use cases, you get into things such as goods not delivered, goods being faulty, etc. And it's back to Kat's point and kind of working out the kind of demarcation so it's clear to the customer who they go to with what issue. Because the worst thing for a customer, I think, is to be passed between a fintech and a bank backwards and forwards. And it's kind of that upfront clarity saying, well, if you have these kind of issues, phone your bank. If you have this, fintech. And I do think there is a conversation around looking at how you build more protection beyond PSD2 into this, but that's going to be on a kind of voluntary basis by the participants.
Interesting. Before I go to one of the last questions, we have had a few from the audience, and I want to make sure we get to them. My last question is about the future, but actually Sid in the audience has asked about the present. Sid's asked, are variable recurring payments going to be delivered soon? We've heard that sweeping is prioritized, but there is no definitive date for VRPs. I guess further to Alan's point earlier, it's kind of down to the market to provide. But Stephen, from your side, what if you had to put a definitive date on when we're going to see this technology make it to market? When do you think that might be?
So our intention is that we are doing both sweeping and payments at the same time. But that's a decision for each bank looking at this ultimately, and to work out what additional processes, what additional kind of procedures need to be put in place for various sweeping use cases. And don't forget, looking at commercial contracts and setting up that takes time. We've never done this before. You are not going to find massive amount of people doing payments in January. But you will find potentially some interesting trials leading on to wider propositions. But don't underestimate the contract piece.
Sounds good. Kat, on timelines, any want to add anything on there?
No, I agree with Stephen that so one of the beauties of Plaid in the US is that we've been doing these data access agreements, as we call them, with the banks, but I can tell you they take time, and we have a large team solely dedicated to actually doing these agreements. So they take a long time. We will probably see a lot of sweeping use cases and potentially some trials for payments, but I think the payment element of VRP is going to take a little bit longer.
So last question from me now, and this is really looking to the future. Now that VRPs for sweeping are mandatory, what is your expectation for the future? What comes next? And Alan, I think I know what your answer might be, but what comes next?
I think this is the accumulation of a lot of hard work to deliver open banking in the UK. So in terms of what's next is to make what we've come out with into a proper reality. Real sweeping use cases in the market, real VRP use cases in the market. Now, if I look at the overall job of open banking, is it done? No, there's a lot more that could be done. There's a lot more in open finance it could be done. There's a lot of wrinkles in terms of some of the technical functionality of the standard, and whether that's for OBIE to do or for the market to do or for somebody else to do, I don't know. But if you look around the world, they're all saying, open banking is open banking 1.0. What is open banking 2.0? And what is open finance and smart data? So there's a load more that we could do. We are still, I think we've made a very big beginning. I think 4 million is not just the start of something. I think it's a significant inroads into something. But there's a lot more that could be done to make payments using open banking rails ubiquitous in the UK and beyond, but also to make open banking and open banking enabled services and open finance enabled services ubiquitous for the UK marketplace and beyond. So there's a load that we could do. Whether OBIE has a significant role in that or not, I really don't know, because we're waiting for the CMA to decide on the future governance of OBIE.
We are looking forward to hopefully hearing more about that very soon. Kat, what's your last word on looking to the future? What are your expectations?
Just that we're very, very excited for the future. I think VRP is a huge opportunity, both sweeping and also the payments. And we kind of really see it as taking those mundane tasks like card on file, direct debit, standing orders, like that we all do every day, and kind of taking it from mundane and making it magical. So looking forward to kind of developing use cases in the market.
Fantastic. And Stephen, last word from yourself. What are your thoughts on the future, and what are your expectations for VRPs?
So open finance aside, which is another interesting debate, I think in the medium term, the industry is going to look at how it evolves and puts in place greater consumer protection around both sweeping and VRP. And I think that will be industry-led, because I think the regulatory timeline is too long. And I also think that we will focus as well on some of the wrinkles around open banking payments. There are things around payment status, there are things around payment context messaging, there are things around authentication that could be improved as a industry initiative.
Fantastic. Well, I know some of the topics you just touched on, consumer protection especially, we are going to keep tackling this afternoon with my next panel. But firstly, let me just say a big thank you to Alan, Kat, and Stephen for joining me for that discussion. As I said, next up, we're going to be switching focus slightly. We're going to be talking about VRPs and sweeping, looking towards more consumer-centric ways of paying, focusing on that payments question. As with the last panel, I'm joined by three fantastic experts. I've got Duncan Barragan, who's the Chief Product Officer at GoCardless, Lars, who's the Head of Product at Wise, and Dan Schooley, who's the Chief Operating Officer at MoneyHub. I'm going to dive straight into questions, if that's okay. And my first question is really on that payment side of things. Will VRPs be able to replace other payment methods, such as direct debit and card payments? Duncan, I'll come to you first with this. What are your expectations for VRPs replacing, I guess, the card payments that we already have?
Thanks for having me, Oliver. Yeah, we've been close to VRP for some time now at GoCardless, given we're entirely focused on account to account, and we were delighted to work with the OBIE to take the first ever live transaction back in the heady days of the regulatory sandbox. I think as it's evolved so far, it's really clear that it's going to take some share from a variety of different methods, but the real question is going to be how much. And that's going to depend, to a large degree on the non-sweeping availability, because obviously it opens up a range of use cases, but also really crucially on how well it works and how much it costs. So, if you take the share from DD perspective and a DD versus VRP, in essence, VRP is faster with lower fraud risk than DD, but it has lower payment preference because no one knows what it is at the moment. Worse conversion and higher costs. So I think what's interesting is then you add VRP in a way that allows you to take it recurring, and it doesn't really change that. So for us, the heart is going to be about combinations. Actually, I think you're going to want to use it with some situations and some payers, but versus DD, you'll want to use DD for others. So if you're in a use case like many of the sort of core direct debit ones where fraud and security aren't very live problems, what makes it worth the extra cost and the extra conversion hit and things. Whereas probably the more exciting side actually is some of the newer use cases where previously direct debit wasn't really very viable because of the risk. I think on DD, we believe in the combination. We believe that the key is the customer segmentation and intelligence to be able to judge which one to use with which people. And a lot of that's the same with cards, actually. It is going to be cheaper. The fraud risk will be a bit lower. And the conversion and payment preference are going to be crucial again. Sort of the same factors at play. And I think there you'll see it take some share from things where the cheapness really matters and there maybe isn't as much to play on the conversion and the preference. But it's essentially, we think it's all to play for in terms of how much, but it's going to take some share from cards, from DD, and from things like PayPal.
It feels like we're approaching the sort of experimentation phase where we'll see what flies and what doesn't. Lars, on your side, obviously very excited about VRPs and where they could come in. What do you think could hold this revolution back? I mean, Duncan did just touch on a few of the issues around cost and education, I guess. What are your thoughts on what might stop this from being as successful as it could be?
Hi, Oliver. Thanks for having me here. Well, first of all, I think VRPs are probably the next best thing since sliced bread. So I'm very optimistic about the future here. Now, of course, it's going to take some time for the uptake. Back in Estonia, where I'm from, if you look at e-commerce as such, it's actually not dominated by card payments as it is the case in the UK. It's actually dominated by something that looks very similar to an open banking payment, actually. So if we're now comparing the two, in Estonia, open banking effectively is dominating the market, whereas in the UK, it's still starting to catch up. If you kind of draw the mathematical asymptote, if you will, I think at one point, you are going to see more payments going through open banking than at cards if you look at e-commerce, because there are examples that already do that. The reason is very simple, right? Because as kind of Duncan mentioned, you have effectively a payment method which is instant and is as convenient as a card payment, but it's not as burdensome for the merchants as a card payment at the moment is. Now, what could stop VRPs, which is in effect an even higher level than what we currently have in Estonia, because you effectively only have to go through the authorization flow once. What could stop it is the actual volume of use cases where we can use it. At the moment, sweeping is absolutely fantastic, and I bet there are a lot of services out there who are going to start benefiting it from basically January, right? But ultimately, I think the real benefit is going to start when you get to all these other adjacent use cases, when an open banking payment can effectively start competing against other ways of paying online. And that is now going to depend on a lot of factors. Up until this moment, we've had the benefit of the regulator pushing for quite substantial changes in the industry. But how long can we take this forward? When will the industry development itself take over? When will the commercial models land to the point where both banks as well as the fintechs, if you will, can start innovating on this new plateau to the point where we can build a new payments world for everyone.
It's really going to come down to those use cases that are enticing and successful enough to draw people in and gain market share. I want to talk about those use cases because we heard a little bit earlier, someone, I think it was Stephen, who mentioned about the parking ticket sort of scenario where a VRP might be a much more easy thing to authorize than a traditional card payment. Dan, from your point of view, what sort of VRP use cases have emerged or are you hearing about? And is there one that, in your opinion, will be the flagship for this new way of paying?
Thank you. Thank you very much for having me here today. I think there won't be just one killer use case. I think there's quite a lot to come. I think we'll see early days. We will see the sweeping ones come through. £2.2 trillion in UK bank accounts, savings accounts, and cash ISAs, costing us all £27.8 billion a year in real terms. It's a lot of money to just sit in a bank account. So I think the first things we will see are people sweeping money to make it work harder for them. The virtual kind of overdraft facilities where we can move money from accounts that have got cash to avoid charges in overdrafts and credit card bills. And of course, that does put pressure on the banks who make a lot of money from those services. So I think it's great to hear that NatWest are going to hit the deadline. They're going to do VRP and sweeping at the same time, because that opens up a lot more opportunities. So the car parking one's great. We're all going to be driverless cars, so they can just pay tolls as we're driving along. I can set up a VRP for my children when they're at school to automatically take the money out for lunch. I can authorize it remotely if I want. There's lots and lots of things that we'll be able to do. But I do think, the original question at the start of this session was, will they replace existing payments channels? But it's a bit like, it's a twee kind of analogy, but it is a bit like asking Henry Ford if cars are going to replace horses. Maybe not on day one, but, they will, because as we've heard already, the other payment services are flawed for a digital world. I even think VRPs help somewhat to start to deal with the cash economy as well, which we don't talk about much, but that it helps with that.
Interesting. Duncan, from your point of view, specific use cases, and I know I'm putting people on the spot here, but are there specific use cases that you see emerging or that you think will become, I liked how Dan said, the killer app, I guess, of VRPs?
I think it's probably less killer app than proliferation and expansion. I think, to the point I made earlier about combinations, that can actually apply to any area. An energy company may not be very worried about its core of customers that have paid them reliably for a long time and may not be willing to pay more for that. But on the other hand, they might have problematic customers where it's actually super important that they go through it. So I think the combinations are there. The places where I think you're likely to see the highest share early on are probably the high value transactions, where there's that combination of sort of a lot more to gain from the security that comes with it and a lot less to lose around conversion, because anyone who's sending a reasonable amount of money it tends to be a bit less sensitive. So we work a lot with savings and investment companies there, and it's clear that there is a huge amount of promise in some of the high value aspects of that. But I am gonna come back to the cost side, because I think it's super important. If there's any banks out there listening, that the costs of this are significantly higher than the old infrastructure. You've got some banks charging small business customers 30-40p just to receive the faster payment, never mind everything else. And clearly, if you're trying to sweep a couple of quid for a coffee, and this starts to become quite problematic for businesses in particular. So yeah, I think the bit that I think would be really transformation, if we can get it right as an industry, is if you can remove a lot of the friction from those direct account-to-account transfers and allow smaller ones, because that's where it picks on some of the stuff Dan was saying, where you can actually start to have some quite innovative new things happening. But I actually think that otherwise, if the costs are too high, it will become something that's much more focused on the high-value use cases where it doesn't matter. So I'd love to see it sweeping into all these low-value use cases, but I think the start will come in high-value, where there's really clear benefits and the downsides aren't as significant.
Interesting. It all comes down to cost at the end of the day. Lars, before I go on to the next question, what's your take on use cases and I guess sweeping and VRPs?
Yeah, I think my prediction is that you're going to see a lot of niche use cases becoming way more prominent in people's lives and decision making. When the first and the second payment services directives came to play, you had a lot of fintechs come to the market. But one of the biggest challenges was getting the money from the customer's bank to that actual use case. And all of a sudden, if you opened up your phone, you had your banking app and you had 7, 10, 15 other different apps, and that became overwhelming. Some banks started solving this by, okay, let me integrate some of the fintechs into my space. Other fintechs try to figure out more convenient ways to get money from the bank to them. What I think this will now do is that because you're effectively programming your money in the background, you're establishing that link between your bank account and whatever niche service you want to use, all of a sudden that what we think is really exciting, but for most people is actually quite boring, the payment part of it is now happening in the background. So for example, if you want to go abroad and you just don't, and you have a special card that's going to save you money when you spend in another currency, if you just don't happen to have money on that account, you don't have to go through the thinking process of, okay, I now need to get money from here to there and then I can use it. It's just going to happen in the background. You're just going to go and pay and all the magic happens in the background. So I think what you're going to see is that all these new services that have emerged as a result of the changes we've seen in the past 10 years are now starting to benefit from this open banking infrastructure in the background.
Fantastic. Well, obviously Wise does have a multi-currency card, so we'll be keeping a close eye. Maybe we'll see some of those early use cases emerging sooner rather than later. Before I go to the next question, we've had some great audience questions come in. Just to shout out, if you've got a question, please post it. And we've only got a few minutes left in this conversation. I will try and get to them before the end. Duncan, from a regulatory point of view, do you think the scope of, we heard from Alan a bit earlier, do you think the scope of VRPs should have been wider to develop better use cases and I guess speed up adoption? Do you think this should have been sorted out at a regulatory level, or is it okay that the market gets to decide here?
In thinking about this one recently, yeah, I think to me it's always seemed clear that the sweeping should have been part of the original intent of the mandate that this was all for, and obviously that's kind of where we've arrived. So I'm in agreement with that. At the moment, I think there actually probably was a natural progression that was helpful. If we'd launched immediately into VRP with some of the early stage user flows that were in existence when all this first came to fruition, then I think there actually was a bit of a risk that the whole thing could have been quite problematic and that it could have caused damage. So I think on reflection at the moment, I think we're probably going through about the right sequence at the moment of actually making sure that these flows work and giving people opportunity to improve them, giving the banks time to, improve the user experience of those flows, etc. Sort of before we get into actually much more fiddly and complex recurring use cases. So I've been thinking about it. At the moment, I think it's actually probably a healthy progression, but yeah, others may disagree.
Dan, what do you think about that?
Well, so we co-founded F-Data in 2014 when the original order, the work that led to the ultimate order, was just kicking off. So in a way, it feels like it's been a very long time coming, and it was always kind of inevitable for us because sweeping in particular was just the obvious use case. So on one hand, I'd say it's been painfully slow, but on the other hand, I do agree with what Duncan was saying there. As an industry, thinking more broadly as an industry, it does take time to get these things right. And even if you look at things like the user journeys, what will kill this off is if every bank has a different user experience. And we had to kind of almost prove that the hard way with the original, even just account aggregation. So taking the variable out of variable recurring payments when we're talking about UX is the important thing to do. So I think Duncan's right. As much as we would love it to go a lot faster, as an industry, we've got to be a bit responsible and go at the pace that works. And I think all credit to OBIE OBIE for probably getting that balance right, because it's pretty tough with all of us having a different opinion.
And just to stay with you, Dan, for one more bit of this question, the UK is obviously ahead of the pack when it comes to variable recurring payments. But as we all know, the internet is a big place and it's a very globalized landscape out there. Does it matter that the UK is I guess, further ahead when it comes to VRPs? Will that, I guess, hold back the establishment of it?
No, I don't think it will at all. I think if anything, it will expedite it. So any new technology starts somewhere and then goes out across the world, and you can go back as far in history as you like, railways, if you like. We start it, we prove it works, we try and get some regulation in place so that we don't all build different gauges and the trains all fall off the track when they cross borders, and then we go from there. And I think VRP, variable recurring payments, is exactly the same. And what's great, because it's been mandated for the CMA 9, most of them are international banks, and therefore we'll see the benefits in time and expedite rolling it out across the world, fingers crossed. And that's what we've seen with the rest of open banking. It's now a global phenomenon and led by the UK.
Mm-hmm. Let's enjoy leading this next bit of the revolution. Lars, to yourself, we touched earlier in the conversation on the last panel a little bit about the potential risks and threats, and the panelists had some really interesting opinions on liability and where those sorts of things will sit. What's your take on the potential risks and threats that could arise with the new payments mechanism? And do you have any take on what we should do going forward to deal with those? Do we need, I guess, an open banking guarantee of some sort?
Yeah, I think it's a very valuable question. I think the appropriate way to approach this problem is to look at it use case by use case, because it's a very different scenario when you go and buy a £2 coffee versus buying a 1,000 pound 3D printer that doesn't arrive or doesn't work versus moving your life savings between your accounts. Those are very different scenarios, and I think at the level of protection that we'd want to introduce as an industry should take those circumstances into account. The flip side of that argument immediately is, like, we should also ask what are the risks that VRP actually mitigates? Because some of the risks that are out there, for example, with direct debits and the amount of fraud that exists there, come with, let's say, the lack of secure authentication, which is such an inherent part to open banking payments and VRPs. So I think to fully assess that question, we need to look at both ends, like where are VRPs lacking in terms of protection, but where are we also adding an extra layer of security that is mitigating the existing risks in existing payment methods. And we'll find that out, I think, as a result of pushing this to the market and getting our first learnings from that.
Makes sense. It makes sense. Duncan, from your point of view, I want to make sure everyone has a take on this question around the risks. Do you agree with Lars that the benefits will ultimately far outweigh any risk that there could be?
Not entirely, I think, is my answer. To me, I think that the biggest risk is essentially on the customer protections for the payer involved in this. And sort of my take actually on what's happened recently is that it's essentially been put into the competitive space for PISPs to drive, right? And at GoCardless, we're really excited to take up this mantle and create something that's really compelling for the payers and the merchants alike. But the big risk for the industry, as far as I see, and the thing that worries me is, someone else creating something that involves no customer protections, it being all over the BBC that there's an old granny who has not had her money, the money has essentially been taken and she has no recourse because whatever, that holiday wasn't delivered or whatever it was. And the big negative media story, and if that is seen as open banking VRP as a thing, then it'll affect all of us, even if we're trying to create our own brands and create our own consumer protection. So yeah, my big fear is the story that is that vulnerable customer who was not protected enough from what happened. And sure, they did authenticate it with their bank. There's no dispute that they authenticated it with their bank, but that wasn't the point. They didn't get their goods, or they were tricked into doing it in the first place. So that's the part that worries me. And if it's in the competitive space, I'm become worried what everyone else is going to do, because I know we're going to do it right at GoCardless. But what about all the other PSPs that can create this?
Mm-hmm. There's that sort of, I guess, education plus branding, the label that gets applied, and let's really hope we don't have one of those stories. I'm sure we won't, because we're all working very hard to make sure this works well and it's clearly communicated. A really big thank you to Dan, Duncan, and Lars for that panel. It was a great discussion. Thank the three of you for that. It's my pleasure to welcome our final guest for the late afternoon. I'm joined by Jim Wadsworth, who's the open banking lead at Mastercard, for a brief fireside chat. Jim, welcome. First, over to you. How does Mastercard view this discussion of the evening? How do you view the adoption of VRP?
Thanks, Oliver, and hi, everybody. Hopefully you can hear me okay. So I think firstly, more generally, Mastercard is all in, if you like, as far as open banking is concerned. It's a very important part of our overall strategy. You'll obviously seen us acquiring Finicity in the States last year, and just last week we announced another acquisition here in Europe, business based in the Nordics called Aya. It's a very important part of what we do. On the specific of VRPs, we see it as a really important, or potentially really important, further advance and addition to the open banking payments landscape. And to that end, excited about a hackathon that we're co-sponsoring alongside some other organisations that has just launched, and really excited to see the sort of ideas that will come out of that. Various different people seeking to capitalize on the VRP opportunity. So we're definitely excited about it.
Excellent. Now we've spent a little bit of time this evening talking about the challenges and the opportunities. There's clearly a vast amount of both. How do you sort of what do you think the challenges and opportunities are going to be with VRPs over the next couple of years?
Yeah, I mean, on the opportunity side, I mean, for example, the car parking payment example. We've all been in that situation of either it's one of those few machines that's still coins only, and none of us have any coins anymore, or it's just kind of too much hard work or something like that. And so that's a great example. But first and foremost, the whole sweeping opportunity and the sweeping value case from a customer's perspective is very clear and very strong. It needs to be done in the right way, and to kind of Lars's point around my life savings suddenly disappear to an account and unexpectedly. We obviously that sort of thing can't happen, but starting with sweeping, very logical jumping off point. We're assuming and we expect that over time, VRPs will on some basis evolve into the broader payments world, and we think that makes sense because there clearly are use cases where existing payment methods either aren't optimal at all, or for some segments of society perhaps aren't quite right. But we are concerned at the same time about some of the consumer protection type points that Duncan was making. And actually, I think a lot of those apply to open banking payments more generally, single shop payments, if you like. The scenario Duncan referred to of, the holiday issue. What happens if I pay for a holiday on my credit card, the holiday company goes bust, I'm protected. If I pay on with an open banking payment, I'm not. And so one has to think quite carefully about the kind of consequences of some of these sorts of things. And that's not unique to VRPs, but I think it's even more so with VRPs, if you see what I mean. In general, in payments, the kind of 99% of the work is on the exception cases, the what happens when it goes wrong. Duncan articulated it very well in terms of, the current assumption is that all PISPs behave appropriately. I'm not sure that that's a sustainable long-term answer for the ecosystem. I think we need, as an industry, need to think quite carefully about how we create the right frameworks for ensuring the right customer protections, not just for VRPs, but for all payments use cases using open banking. I also think that that there's a really interesting conversation to be had about the economics. Frankly, depending which bit of the bank you sit in, you could see open banking as being kind of a regulatory overhead with no business case, or you could see it as kind of an interesting way to generate more faster payments volumes on the receiving end. I don't think either of those is quite right. We need to find an economic model where the incentives are appropriate, but also that kind of where work is done, it's being appropriately rewarded. So I think there's some work to be done on both of those, but I do absolutely think if we get it right, open banking payments generally, and within that VRP has a hugely important role to play. It creates competition. It's additive to the landscape, if you like, of payments options. Now, if we think about direct debits is a huge success in the UK, but it also has problems, some of which have been articulated today. And every time you do the consumer research, there's a set of customers who don't like the lack of control that they perceive with direct debit. And so, one has adding more payments options that appropriately meet customer needs on both the payer and the payee side of things has got to be a good thing for innovation.
Just on that consumer protection question, and I know there's no easy answer here, and no one knows what the ultimate solution will be, but how do you think we should go about trying to get to that answer? How do you think we should achieve consumer protection when it comes to open banking payments?
I think firstly, I strongly agree with what was said earlier, which is the industry needs to sort this out collectively. We can't afford to wait for being told what to do by a regulator. I think that would be kind of the wrong outcome. I think there's lots of learnings, whether it's from the card industry, from direct debit for that matter, and from the various account-to-account payment schemes, both within the UK and beyond, where there's a lot of experience that can be leveraged and put together. Things that aren't right that with those other services, and we should certainly learn from what doesn't work and make sure we don't import those truisms. But I think we absolutely do need to kind of get those sorts of things right. And none of us wants the front page of the Daily Mail type story of open banking ruined my life. And there is a risk on that if we rush too quickly into kind of fully opening things up. But if we get the right stakeholders together around the industry table, then I think kind of an appropriately balanced approach can be taken. One doesn't want to kind of create undue complexity, because the more complexity there is, the more overhead there is, and the slower things will be. But I think kind of one needs to get the right balance in place before we really fully open up VRPs to its potential.
I guess there's an ecosystem question here as well. We're all hoping that if this goes well, it's going to create a huge amount of use cases, maybe entire new businesses that will crop up because they can be enabled by this new kind of payment. There's a question about how that happens and how we make sure that happens. How do you think banks, third-party providers, and consumers see VRPs, and what do we need to do to make sure we end up with an amazing, beautiful ecosystem of fintechs and consumers who love them?
Yeah, I mean, let's maybe start with with consumers and businesses, the kind of payers, if you like, who because this is all kind of pointless if they don't see value in these sorts of new capabilities. Nobody likes paying, so value from these sorts of innovations come from taking friction out, overwhelmingly, but taking friction out with the kind of the right sense of control. Everybody on this call, pretty much we're all, I suspect, well versed in the ins and outs of the payments industry, wherever we happen to kind of sit, whoever we happen to work for. And, faced with the same payment transaction, let's say there are 6 different options, there won't be any one dominant method we all choose to make the same payment decision. Some might be happy with their cards, some might be happy with cash, some might be happy with, what is the newest, sexiest, just been launched last week payment instrument to try it out. We all have our different perspectives and risk appetites. So however we think about, this particular payment instrument, be it VRP or something else, kind of is less important than customers understand it. What we have to make sure is that we're not asking customers to try and understand arcane things like, okay, if I use this and it's more than 100 quid, then I'm protected by Section 75. And if I use that payment instrument, I've got a chargeback, right? And if I've got that payment instrument, I'm on my own. We shouldn't be expecting customers to have to understand that sort of stuff. We should be able to kind of say to them, it'll be fine. This is how you authorize. It'll be clean. It will go through. You'll get the product you want. And if you don't get the product you want, you'll be made good. Customers need to understand that, and they need to understand to whom they go. Now, that has a set of knock-on implications. It has a set of economic implications because actually, guess what? Who's underwriting that risk? And they need to, and whoever it is that is holding that risk ultimately needs to be an economic model that supports that. The customer, the consumer, shouldn't need to give a stuff about any of that other than they know that they're good. And if one can create that sort of clarity of message to payers, we're going to have a real success on our hands. That actually needs work to get there. I think that the CMA and the OBIE have done a great job in getting the UK open banking industry almost what I would categorize as the start gate of the payments revolution. I think it's incumbent on the industry, and we're happy to play our part in that. Clearly we've got some capabilities and some interests and so on. We're keen to play our part in helping that vision come to fruition. When it comes to other stakeholders, merchants want to get paid. They want a service which is, readily adopted, easy for them to integrate to, has high conversion rates, has an appropriate level of cost, and is, easy to understand. And the same applies, if you like, to kind of payment service providers, whether it's incumbents or new players. In that sense, it's, this is not new in terms of the payments jungle, or in terms of those needs and expectations. What it is I think one that has real potential to be significant.
Well, I could see some of our previous speakers in the green room nodding in agreement with what you were saying there. The argument about simplicity and making sure that consumers don't have to jump through hoops in order to make the right payment decision. Jim, my last question for you this afternoon, I guess, is around next steps. What should the next steps be in the adoption and the evolution of VRPs? And I guess in particular, what geographies should adopt this and what benefits will we see?
Yeah, I mean, on the geography point, there was I think in the earlier panel this came up, and I strongly agree with it. If the UK can create what is perceived to be a success, one can expect to see that expand into other territories over time. Whether because, as was said, some of the banks in the UK are not just in the UK, or whether it's because financial institutions, merchants, fintechs elsewhere, see the benefit. And if you look at the growing prevalence of real-time account-to-account around the world, that's something that UK was a pioneer of, and what we're seeing is actually other countries, not just adopting real-time account-to-account, but kind of improving on what was done here in the UK. And that kind of, if you like, build up of capability in different places is really good to see. I guess from a strategic perspective, what isn't necessarily helpful is having kind of every country having its own flavor of something. So how does one create global standardization over time is something we spend quite a lot of time talking about and thinking about internally. And that's something we'd love to see. But the start point is let's create a successful VRP ecosystem here in the UK. And, all being well, start to see that exported, if you see what I mean.
Fantastic. Well, I think we've done a great job here today, kicking off some of those conversations. Jim, thank you very much, and it's my pleasure to hand the stage back now to Helen, who I think is going to say a few words.
I am indeed, Oliver. Thank you, and thank you, Jim, for bringing everything beautifully together. And it just. We are a couple of minutes over time, so I will keep this sharp. I just wanted to first and foremost thank all of our speakers for generously sharing their insight, and I asked us to focus on the use cases, and they certainly did us proud. A couple of key takeaways for me. Kat, I absolutely love your strapline, and if you don't mind, we will be using it, taking the mundane and making it magical. I think there's a career in PR and marketing for you right there. That is what I think everybody on around our campfire would love to do with VRP. So what we will be doing is we will be continuing this conversation on our blog. We will be inviting some of our panel to be guest authors of various blog posts. So we can continue that conversation. As always, we will be sharing all of this content in full on YouTube and on our social channels, and also in the edited versions as well. And you will be able to see Karina's fabulous artwork as well. So I would just like to say thank you to my team, Team OBE, who have worked particularly hard behind the scenes. We are, now live in Brazil, and we are doing a lot behind the scenes with roundtables and a huge amount of PR as well to support the industry growth trajectory. So a big shout out to me, because I personally see how hard and how talented you all are. And I would just like to thank you, Oliver, for generously hosting this industry debate and letting everybody have the space to say and to share, particularly around all the dynamics of the ecosystem and that consumer protection point that we did cover right the way through. So thank you very much. Jim, I heard what you said about global standardization. That's something that I've been receiving a lot on WhatsApp, and maybe that's the theme for another conversation when we look at our agenda for next year. But I'm going to finish with a quote from Duncan, who said that VRPs is all to play for. I think that's beautiful, Duncan, and I thank you, Alan, for the pace. Everybody has said that OBIE got the pace right, so big shout out to OBIE, and hats off to NatWest for saying that they are going to hit their deadline. You said it, Stephen, around our campfire that goes out to thousands. So hats off to NatWest for doing that. But Duncan, we have all to play for. So that is a line that I want everybody to remember. All that remains for me is to say thank you very much for tuning in, and to wish you all the very, very best of health. Thank you and goodbye.